Oh, welcome lads. Today we are having a look at Intertek, a testing laboratory company who issues certifications and does risk management and many other services. We're going to have a wee deep dive, a quick dive into Intertek. We're going to have a look at their stock price, then their dividend, and see how that pays out. So without further ado, let's get right into it. So Intertek, total quality assured is their tagline. Industries they operate in, as you can see. Is there an industry they don't operate in? They, across everything from chemicals to construction and engineering, energy to food and healthcare, government and trade, and then retail products, all the way to transportation and hospitality. Now, what do? Well, what they issue is they give assurance. They mitigate risk in operations and supply chains. They do testing on products to make sure they exceed quality, safety and sustainability. They do inspections to make sure value and safety of your raw materials, products and assets. And they also issue certification. I believe they also issue ISO 9000s. And you can see their stamps across many items in many industries. So let us jump over to their investor relations. I'm actually going to click on over to the investment overview, or they talk a bit about themselves, but it provides us with a good bit of insight into them. The investor relations page of any company is extremely important, provides everything from their annual reports to their dividend, information about regulatory news, and their share price, along with other information. Let's have a wee nosy here. So let's see why this is them talking about themselves and why you might want to invest in Intertek. So they are a leading total quality assurance provider to industries worldwide. They have over 1,000 laboratories and offices and 44,000 employees in 100 countries. They deliver bespoke assurance testing, inspection, certification, as we've seen in the previous page. Let's see. We've seen all of that. Their revenue growth over the years, their profit growth, earnings per shares went up. And they have also had a progressive dividend. Lovely. As you can see, this is some of the... where is it? I think it's down... There was a wee stamp that you see on several of them. But anyway, global network, leadership positions, their strategy. They have a depth and breadth of quality assurance solutions, passionate and entrepreneurial, and high margin, strongly cash generative earnings models. Love cash. Love cash flow. All right, let's jump on over to their stock. Ticker symbol ITRK, Intertek Group B PLC, on the London Stock Exchange. LON, if you ever see that, that is the London Stock Exchange. They are currently trading at 4,261 pence, so £42.61p. For our friends across the water in the US, you'd be talking around $52, $53, something like that, depending on currency conversion. Dividend yield at the moment is a 2.48%. Revenue of over 2.7 billion sterling. Founded in 1996, and they are headquartered in London. Also part of the FTSE 100. Let's jump on over to one of my favourite websites, Dividend Max, where you can find all the information you could ever want on their dividends specifically. So as you can see here, they pay in 2 dividends per year, so every 6 months. Their previous dividend was 71 pence, and it went ex-dividend 1 month ago. Let's see, if you had 100 shares of Intertek, you'd have been paid £71. If you had a single share, you'd have been paid 72 pence. So a bit of information on the Dividend Max website. The ex-dividend date here provided, that is the date that you must own the share before you will be paid the dividend. If you sell the share before that date, you don't get the dividend. But if you sell the share after that date, you will still get the dividend payment to yourself. The payment date is the date that will land into your brokerage account, although take it with a pinch of salt, because sometimes it will be about 2 to 3 days after the payment date. Not that that's a massive worry, but just something to keep in mind. Let's have a look at their annual dividends. As you can see, they have indeed been growing. They had a bit of a dip in 2011, although a lot of companies did. And then in 2012, they recovered all the way up to 2019. Now, the last 2 years, they've been pretty stagnant on their dividend. They could grow again. It's always a possibility. Or they could go downhill. It's all about research and having a look and doing your own sort of risk analysis if you're investing in a company. Of course, none of this is financial advice. I'm just simply trying to give you all the tools that you could need to make a good informed decision. Never invest in a company that you don't understand. That is the number one rule here on this channel. Always have an idea as to where your money is going. Now, jumping on to Trading 212, the brokerage that I use for my own portfolio in ISA. As you can see, they are currently trading at their lowest point since 2017. Is that a good buy? Is that a sign of things to come? These are the questions that is best asked before you invest in any company. Now, scrolling on down, we can see here they've brought in 2.7 billion, their market cap 6.8 billion, and their PE ratio is sitting at around 23 at the moment. Now, the PE ratio obviously depends across different industries. Normally between 20 and 25 is good, but again, industries vary, so it is a ratio that you should look into with some depth, because it can be quite a good indicator of a company's value. Now, let's see here. Revenue has actually went down in the past wee while. They're operating at a 10% profit margin. Total assets has actually went up, and cash flow is pretty, I want to say stagnant, but I can't really see it doing all that much recently. They have spent 586 million last year on investment. Let's look at how much they paid out last year in dividends. 170 million sterling. Not too bad. It's a lot of change, isn't it? But yeah, I will have a pinned comment below, lads, for Dividend Max and the investor relations for Intertek. I'm not affiliated with any of them. I don't own shares in Intertek. They aren't in my portfolio. So this has just been a brief overview for you, and I'm giving you all the tools. They're all free tools. You don't have to sign up for Dividend Max. You can if you want, but it's a free to use tool. So hopefully you can make a good decision on it and see, maybe it joins your portfolio, maybe not. Who knows? But thank you for watching as always. Have a good morning, evening, afternoon, wherever you are. And thank you for watching. See you in the next one. Bye-bye.